Okay, friends, once again welcoming you to the NPTEL MOOC module on India's trade theories and empirics, international trade theories and empirics, where we are at the verge of ending the 11th week, and this is last lecture of that 11th week, where we try our best to connect the exchange rate dynamics, the open economy macroeconomics to the the earlier discussion which I made on trade unionism or trade blocks. Okay. The trade blocks versus blocks we have already discussed in our 8th week or module. We have said that country strategize their economy to take the best advantage in the trade negotiations or in trade transactions. So, in the international theory and empirics, we have already estimated some strategy earlier. One of the strategies is through optimum currency area, joining or not joining, what is called optimum and how the currency area is defined, under which conditions a country is going to join the currency area. So, the famous example for it is Eurozone euro currency, and how the birth of euro currency has actually protected the Eurozone. Okay, we in this pretext let me start the lecture. So, to start with, there are a couple of questions we need to ask, that is a country by definition an optimal currency area? If the optimal number of currencies is less than the number of existing countries, which countries should form currency area? Okay. So, if the optimal number of currency is lesser than that the number of existing countries, does that mean that the number somewhere is confusing the currency area? So, to explain this, we are going to discuss the optimum currency area. In short, it is called OCA. So, two questions we have put it forward here, and OCA pioneered by Mundell. Okay, Mundell, then further this was complemented by Mackinnon and again by Kennan. Okay, Mackinnon and Kennan both has actually complemented the OCA theory. The theory actually addresses the question of under which circumstances a country benefits from the membership in a currency union. Okay. So, which circumstances that help the member to take the benefits of its membership. Okay. Now, according to the OCA theory, a country that considers membership in a currency union has to balance the economic stability loss, that is from losing national monetary policy, against the monetary efficiency gain or through competitiveness gain due to a decline in the general price level and stimulated aggregate demand and enhanced exports of a single currency. Once again, according to the theory, a country that considers membership in that union has to balance the economic stability, okay, against the monetary efficiency gain. So, monetary efficiency gain of a single currency. So, economic stability and its losses against any kind of inefficiencies is actually discussed in the OCA theory. Now, Baldwin and Wiplow stress that the loss of economic monetary policy sovereignty becomes most significant for members of a currency union if poorly integrated member countries face asymmetric macroeconomic shock. So, monetary sovereignty gets lost due to joining. I think Brexit was discussed largely in the last year on Britain's exit from the currency union. And what in this context, many economists suggest that it is not good, there are positive sides, there are negative sides. So, most importantly to take a note here is that it has some economic loss due to the monetary policy sovereignty, the loss of monetary policy sovereignty, and and that might resulted due to a poorly integrated member country which have faced the asymmetric macroeconomic shock. So, we are referring the source here, you can just have a look for further details if you want, otherwise most of the points we have contained in this discussion. Okay. Now, in economics, an optimum currency area or optimal currency region, that is OCR, is a geographical region which it would maximize economic efficiency to have the entire region share a single currency. Okay. So, maximize economic efficiency due to the entire region covered with a single currency. The underlying theory describes the optimal characteristics for the merger of currencies of the creation of a new currency. Okay. The theory is used often to argue whether or not a certain region is ready to become a currency union. One of the final stages in economic integration, as is explained in this theory. So, whether certain region is ready to become a currency member of the currency union, that is one part of the final stage of economic integration. So, an optimal currency area is often larger than a country, obviously because so many countries merged not by their physical boundary, but by their currency. So, for instance, part of the rationale behind the creation of the euro is that the individual countries of Europe do not reach form do not each form an optimal currency area, but that Europe as a whole does. Okay, individual is not form the currency area, rather it is as a whole. The creation of the euro is often cited because it provides the most modern and largest scale study of an attempt to identify an optimal currency area, and provides a comparative before and after model which to test the principles of the theory. So, the most modern and largest scale study is referred to as euro. Okay. And this could actually prove to a great extent about the idea of optimum currency area, because it gives before and after information related to the principles of the theory. In particular, an economic shock is considered to be asymmetric if only one part of the currency union is hit by the shock, while the other part is spared, or if member countries differ widely in terms of the shock's impact on their economies. So, asymmetric information due to the economic shock is actually noted. So, if all are not treated equally, then asymmetric shock is also identified. Hence, if some countries in a currency union experience a positive demand shock or negative demand shock, this would lead to disequilibrium, as output and prices in those countries and would be too high or too low. So, prices or output could be high if there is a positive demand shock, experience a positive demand shock, so the output and prices would, of the countries would be too high because of positive or negative shock. So, we are now here referring shock to the union, okay, shock to the union, and that actually created disequilibrium condition. So, the union's common central bank could then increase its money supply and help countries to recover its economic strength. So, there was the role of the common central bank is important to actually neutralize the disequilibrium conditions. But if the money supply and the common central bank raises that or adjusts the money supply, that would be at the cost of inflation for sure. Okay. Thus, in the presence of an asymmetric shock, so here we are emphasizing largely on the asymmetric shock. Asymmetric shock that we are connecting through connecting through major change in quantity and prices. That is one side we have discussed. Second aspect is role of common central bank. That would actually also lead to the discussion of cost of inflation. Then so the presence of asymmetric shock, the central bank's monetary policies to overcome the shock in some countries would at the expense of the others. Okay. So there will be because of the asymmetric shock, there will be case to case differences in terms of implication. So this according to the claimant et al. Argument that adjustment to asymmetric shock must occur through labor mobility, changes in price and wage levels, and fiscal transfer payments among member states. Claimant talked about adjustment to the asymmetric shock. Basically, here we are referring to the adjustment to asymmetric shock. Now, it is at the expense of another one. So, some countries are adjusted at the expense of others. That is another important point to note. Okay. Now, they suggest that if it is not through monetary policy, since there are other implications, it could be through labor mobility, through price and wage levels, fiscal transfer payments, etc. Okay. To join OCA, to be in the OCA, what are the criteria important? The OCA theory actually offers a set of criteria to assess the suitability for membership of a particular country into the union. That these criteria are broadly divided into two groups. Okay. So, first one is called asymmetric shock through the exposure, like exposure of member countries to the asymmetric shock, like such as what we can connect is similarity of economic structure, openness and interregional trade, and low degree of specialization. So, to reduce the exposure of the shock, that is the asymmetric shock, that the criteria is like similarity of economic structure, openness or interregional trade, and low degree of specialization would actually help. Second criteria to adjust the asymmetric shock through homogeneity of preferences, factor mobility and transfer payments. This is first, this is second as a point to understand the criteria to deal with the shock. So far as the first group of criteria is concerned, which I have already just identified, Babler et al. Pointed out that the importance of countries, similarity in economic structure is important. So, similarity in economic structure emphasized by Babler et al. So, currency unions exposure to asymmetric shocks is reduced if the differences among member countries are small. Okay. The shock is actually reduced when the differences among the member countries are small. When the difference is small, obviously the asymmetric shocks are lesser. That is because the sensitivity to the economic shock is comparable among all countries, and monetary policy will serve all member countries similarly. Okay. Now, the openness criteria like Mackinnon criteria described by Baldwin and Wiplows and originally introduced by Mackinnon suggest that foregoing an exchange rate does not entail a serious loss of policy interdependence for member countries that are very open to international trade. So, foregoing an exchange rate does not entail a serious loss of interdependence of member countries that are open to the international trade. All right. So, this is related to the openness criteria. Now, in some other point related to the first criteria is that the nominal exchange rate is no longer an important adjustment tool for very open countries, because changes in the nominal value are quickly followed by changes in the domestic prices, leaving real exchange rate unaffected. So, nominal exchange rate is no longer important adjustment tool. Okay. So, adjustment tool first criteria. Adjustment tool. Okay. So, it says that nominal exchange rate is not that effective, rather ultimately it connects to the real exchange rate. All right. So, inter-regional trade within a monetary union is commonly thought to boost the integration of product markets and hence to foster economic integration through closer trade links. So, inter-regional trade within a monetary union is commonly thought to boost that impact. Finally, a low degree of specialization as mentioned by Mackinnon implies that the impact of sector specific shocks is relatively small if countries produce a wide range of product. If there are wide range of products, then sector specific implication is relatively smaller. Okay. This is important to take the note. All right. Now, coming to the second criteria of the OCA, optimum currency area, to the member countries, that the homogeneity of preferences is considered an essential prerequisite in order to guarantee efficiency management crisis. So, homogeneity of preferences by their member countries for the products is important. As monetary policy is transferred to a supranational level or supranational level, it is not supranational level, a consensus on the way to deal with asymmetric shocks becomes a necessary conditions for monetary policy that serves as one size fits all approach for the entire consensus. Most importantly, the consensus. Consensus is important to deal with the shocks. So, factor mobility, as already we have mentioned, comprises of free movement of labor and capital. Mundell points out that residents of depressed regions can migrate to prosperous regions, and the international capital flows reduce the danger of balance of payments problems that result in devaluation and capital losses for foreign investors, as money can easily be shifted into more favorable investments. So, the international capital flows actually reduce the danger of balance of payment even. This is criteria for adjustment, for shock adjustment. Okay. So, some other points are relevant so far as the second criteria is concerned. One is transfer system may also contribute to overcome the economic shock. Transfer payments, any kind of transfer system or transfer payment can support the recovery of the depressed countries. if a country that runs the risk of sliding into recession receive payments from other member countries. Okay. So, this is one point, this is second, this is third, this is fourth, okay. Then fifth consensus, then homogeneous preference. There are 6 important points connecting to the criteria of OCA. There are some evaluation of the European Monetary Union as a currency area. This is the most important currency area discussed in the discussion of optimum currency area. So, Ehrig et al. Pointed out that the idea of European economic integration was and still is still based on the endogeneity hypothesis, which states that political integration automatically follows the welfare increase gained through economic integration. Okay. So, they basically discuss that endogeneity hypothesis state that political integration among the EMU implies economic integration. Among the especially in the EMU area. Okay. EMU optimists believe that a currency or a common currency would further stimulate labor and capital mobility. Okay. So, labor and capital mobility and thus induce a greater degree of economic integration. Nonetheless, pessimist this is optimist view we have discussed, pessimists and advocates of the heterogeneity hypothesis. Endogeneity hypothesis we discussed that all are endogenously determined within the member countries. The pessimist view like Karas and Mathes had warned that the EMU could contribute to a further aggravation of economic divergence, and therefore argued that the introduction of common currencies should have been postponed until the euro area had achieved the necessary properties of OCA. So, what is important that so far as the pessimist view is that the EMU could aggravate the economic divergence. This is called pessimist view and this is called optimist view. All right. So, through the heterogeneity approach, once all the properties are fulfilled, then euro area could actually solve the purpose of the optimum currency area. Coming to the discussion related to exposure, there are different groups. I think we have already discussed some of those points. Now, how asymmetric shocks are dealt, what are the factors, largely we discussed similarity in economic structure. In case of similarity in economic structure, income is heterogeneously distributed in eurozone, and this displays regional GDP per capita adjusted for prices in the left hand panel, and GDP growth rates in the right hand panel, both for the year 2011 as per this figure. So, in the left hand panel we are discussing about the GDP per capita adjusted for prices, and on the right hand side it is GDP growth rates. Okay. So, GDP growth rate and GDP per capita, and this has been adjusted for prices. So, we are just trying to understand the income growth rate disparity in the euro area in 2011 in percentage. As per the Eurostat data, Eurostat's general and regional statistics data of 2013, that Finland, Luxembourg, Belgium, France, Austria, Netherlands, etc. Now, GDP per capita it is not so much varying, okay, though highest in Finland adjusted to the prices factor have been considered. Then some countries like Finland, Luxembourg, Belgium, France, then Austria, Netherlands, Ireland are above the eurozone if we are taking consideration 100 as the average. Then coming to the GDP growth rate. The standard average growth rate exceeded in most of the countries. Estonia, Slovakia, Eurozone average is 1.4. This is I think higher in Estonia, Slovakia, Germany, Finland, Austria, Belgium, Luxembourg, France, even Malta, and to some extent Ireland. These are income and growth rate wise disparity. Now coming to the labor productivity, real effective exchange rate and unit labor cost. Now almost look at the countries like Germany, Greece, Italy, Portugal and Spain. Real index is taken with the base 2005 as 100. I think labor productivity per capita is taken and it is rising over almost in all the countries. Okay. And so far as real index is concerned, real index on the right hand panel is concerned, it is also rising, especially from 2000 onwards. Okay. And the fall was noted from 95 till 2000 till 1999. This is as per the World Bank data based on the Conference Board of the Total Economy database. All right. And we are just explaining the similarities as per the group 1 criteria, so as to explain the exposure to asymmetric shocks. Now second aspect is openness and interregional trade. The degree of participation in international trade reflects the openness of a country, which Baldwin and Wiplows define as the share of economic activities that is devoted to international trade. Okay. Usually it is in terms of export plus import that is calculated as the openness. Using data from the World Bank, the authors calculated, it is not we, the authors calculated, the same authors calculated that the ratio of total exports and imports to GDP for 2011 and annual growth rates between 2000 and 2011 for Euro countries and the US. The data also confirms that European countries, in particular the small countries like Luxembourg with 161% rise, and Malta 96%, and are actually very open among all the countries. Okay. So, the data using the World Bank calculated the ratio of total exports and imports to GDP for 2011. And the growth rate is now 161% in Luxembourg, and Malta it is 96%. Okay. So far as small country is concerned. Further, the EU as well as the Eurozone exceeds the US in terms of openness. Okay. As the Euro area's average share of imports and exports is almost 3 times as high as the corresponding share in the US. Okay. So, now Eurozone become a bigger area as compared to the US. Now, the intra EU 27 countries and their trade in percentage of GDP, the number here are calculated using the Euro 27 trade divided by the total GDP of those countries. The total intra Euro trade is defined as average of imports from and exports to Euro 27 member countries. These are the source from Eurostat. Okay. So, the trade volume by percentage of GDP actually over the time on the average increases, but it is also more or less stable in different period except 2009 financial crisis. So, after discussing 2 important points, now we are discussing specialization issues. The study by person uses the Krugman index for specialization to examine whether the common currency increase industrial specialization in the US and in Euro EU after the introduction of currency area, whether that has raised to the introduction of or increase in the industrial specialization. These economists studied. According to that study, EU data show that European Union and their countries experience a moderate increase in the specialization. So, there is a moderate increase in the specialization due to the zone, with the mean value of indices rising from 0.39 to 0.43 between 93 to 2008 related to industrial specialization. Industrial specialization. Okay. The US indices however, do not provide a clear picture from as per their estimation by person. From 1970 through 2008, the mean value ranged from 0.45 to 0.51. This is however in US with repeated ups and downs. So, person concludes that industry portfolios of individual European countries became more specialized and that production moved to countries with a relative advantage in the production of certain goods. So, individual country individual European countries have better specialization than that upon the aggregate. Okay. Consequently, the European Monetary Union member countries became less alike in their sensitivity to macroeconomic turbulence and the vulnerability to asymmetric shocks also increased. Since there are differences in terms of product specialization, the that has led to vulnerability and there are asymmetric shocks. The similarly they are not equal, they are not alike, less alike in terms of sensitive to macroeconomic turbulence. All right. So, this is in contrast to the non-existent impact of the dollar in specialization tendencies in the US. Person therefore assumes that the US specialization process has leveled out and the US seems to be more stable currency area than Europe. Why? The question occurs why dollar US dollar has been the more stable currency. Even if EMU formed. So, these are the two answers for this. These are the 2 points answering this question, why US dollar has been the more stable currency even if EMU formed. Okay. This is very important argument and connecting to specialization as the answer for this question. So far as group 2 and the adjustment capability is concerned, to assess the monetary union's ability to cope with with and adjust asymmetric shocks, we then turn to the attention of homogeneity of preferences, factor mobility and transfer payments. Okay, that is basically called capability. So, homogeneity of preferences like when group of countries decides to give up national currencies and form a currency union, it usually pursues a common objective. Then more than 10 years after the completion of the EMO, member countries appear far removed from common support for the idea of European integration. Ludwig realizes that the recent debate about the future development of EMU is also a sign of inefficient decision making process in Euro zone. A sign of inefficient decision making was also noted by Ludwig and related to the adjustment through capability. Coming to the understanding of factor mobility, a number of studies found that the European labor markets are among the most inflexible in the world. Okay. This is important aspect, quiz question, most inflexible in the world, especially compared to the US counterparts. This inflexibility can mainly be attributed to persisting labor market rigidities. So, persisting labor market rigidities were noted, therefore, low labor mobility. Okay. This is also important question. The geographic mobility of EU workers is very low across euro area borders as well as within their own country. Okay. So, geographical mobility of the workers is also within their own country also. Okay. That are some findings by experts. Now, it is visible from this estimation by the author from using the data of Eurostat of the 27 EU members. That the EU 27 look at the gross migration rates is almost stable and even negative in the recent years. Okay, especially from 2008-9 due to the financial crisis. But US there is a upward movement in this period from 2000 to 2010. All right. So, whatever the argument we say, it is visible more or less stable or downward, stable but upward movement, upward in US and this is in Euro, and upward even stable movement, of very less movement, very less mobility within EU and within country. So, dealing with the shock, is dealing with the shock is very difficult. Shock adjustment is doubtful through this approach. Okay. Now, another aspect is called transfer payments, like the payments which is essential for the countries among themselves. In the face of an asymmetric shock, a transfer payment system is a valuable feature in a currency union that helps to re-establish economic disequilibrium. While US can look back on a long tradition of fiscal federalism, a comparable system does not yet exist in the EMO. Okay. US look back on a long tradition of fiscal federalism, but a comparable system does not exist in EMO. Okay. That is, fiscal federalism is another aspect, is there in US, but it is not valid to that extent in EMO. However, a significant increase in European budget in the near future is unlikely. Okay. In this regard. Now, some couple of information to be tested is the EMO and optimum currency area. That is important to note that this evaluation of EMO clearly reveals that it does not currently represent an optimum currency area. Based on our points we mentioned in different approaches, even dollar has been becoming more stable than that of euro. So, therefore, it does not currently represent an optimum currency area. EMO is not correctly explaining the EMO, explaining the optimum currency area. There are many shortcomings that need to be addressed. Member countries differ in terms of in terms of economic performance and structure also. Okay. In particular, the common currency induced greater industrial specialization, which you already said, which in turn increase the vulnerability of the eurozone to asymmetric shock. So, we have already said industrial specialization differ from countries to country, that increase the vulnerability. Okay. So, in the eurozone. Moreover, the EMO's ability to act is restricted, as national preferences with regard to decision making and crisis management differ greatly. So, so taking decisions, especially decision making and crisis management differ greatly, and there are lots of hue and crisis among in different meetings. So, that has led to strategies differ in decision making. Okay. So, alternative compensation tools such as labor mobility, transfer payment, that would help to caution the negative effects of an asymmetry. So, some compensation mechanism might be introduced, should actually protect the asymmetric shock in between. These weaknesses reflect the EMO's difficulties in responding adequately to asymmetric shocks in a way that serves all the member countries. Although some steps have been taken in between to boost fiscal and economic harmonization, discrepancies across the Eurozone remain large, factor markets are not sufficiently unified. Okay. Discrepancies are still very large, factor markets are not sufficiently unified. Hence, the Eurozone area or Euro area is a combination of rapid capital migration and limited labor migration. Rather than an economically well integrated union. Okay. So, the Eurozone crisis and its management, then how the decisions are taken. According to the European Commission, the greatest success in overcoming the euro crisis have been the intervention of the central bank in that is called European Central Bank, ECB. Okay. So, ECB was introduced, that is the lender of the last resort to deal with the euro crisis, and that is based on the agreement on a European banking supervision and the Greek government bond buyback in December 2012. Okay. ECB through December 2012 is one of the standing institution to deal with the crisis. Moreover, several recent proposals also attempted to contribute to an improvement of the current economic situation in the EMO, such as suggestion by the German Council of Economic Experts GCEE to create a European Redemption Pact ERP to bring the public debt ratio of EMO countries below the Maastricht reference value of 60%. So, public debt ratio to be reduced to below the level 60%. A separate proposal advocates for currency devaluation also advocated through price reduction in the periphery of the Eurozone to regain competitiveness. In view of the dramatic outcome of the macroeconomic shock, on the periphery of the EMU, the stabilization measures to be effective, they should calm down financial markets, mitigate speculative measures on the euro and stabilize the Eurozone. So, these are how to stabilization attempts for stabilization. Attempts for stabilizations are suggested. Now, in view of the dramatic outcome of the macroeconomic shock on the periphery of the EMO, for the stabilization measures to be effective, they should calm down their financial markets. They should deal with the financial market, mitigate speculative pressures on the euro and stabilize the Eurozone. That is very essential at this time. So, now the last two slides to sum up whatever we have said so far, that the euro did not promote further economic integration within the EMO. Okay. Although the share of intra-EU trade increased, that is one positive side, increased massively, dissimilarities in economic structure combined with high degree of industrial specialization increase the EMO's vulnerability to an asymmetric shock. That is quite important to note, we have already discussed. Moreover, the lack of adjustment tools such as labor mobility or transfer payment system makes it very costly for the EMO to recover from the crisis. Most of the implemented and suggested stabilization measures attempt to tackle the problems of Eurozone's high sensitivity to macroeconomic distress by promoting economic integration, financial discipline and debt redemption. I think suggested by Germany's council also on that aspect to cap it within 60%. The establishment of rescue programs such as EFSF addresses the EMO's limited adjustment capability to asymmetric shocks, as these programs represent a form of transfer payments such as fully dependent fiscal federalism remains highly unlikely. So, establishment of rescue programs such as EFSF addresses this issue. Limited labor mobility amongst European countries however appears to be rigid and remains the most most important obstacle to the euro's adjustment capabilities that we have already discussed. So, rigid labor mobility among the European countries is another one to be addressed. The economic stability loss from foregoing exchange rates and national monetary policies is greater than monetary efficiency gains, especially for European periphery countries. The economic stability loss is higher from foregoing exchange rates and national monetary policies is greater than that of the monetary gains. This is another important aspect. European economic integration is still in its infancy. So, not yet matured. This requires further action to reduce its future cost and thus make the EMU more resistant to the macroeconomic disturbances. Okay. So, this is still at its infancy stage. So, therefore, awareness of the necessary steps to be taken has actually slowly growing. Efforts to overcome the current economic crisis will simultaneously improve the EMO's long term performance as a currency union. So, attempts will actually strengthen their long term stability of the eurozone and the currency union. So, with this I think we have completed the optimum currency area, and we have also evaluated based on whether in which stage, what are the shortcomings of currency area, especially the EMU. Okay. So, if any in future like countries develop, groups are formed, I think all those indicators are very essential, and India, where India stands, we have not referred here, you can refer such articles for your own understanding. So, these are all the discussion here. So, let me stop here. Thank you.